You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for the Option Block. Everyone's favorite. I know it's my favorite. Hopefully it's your favorite bi-weekly source for all things options related. A little bit of options with some wisdom, some unusual activity, some education, some strategy. Stir it all together into the tasty stew. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Happy April Fool's Day. It's one of those weird holidays. You don't really say Happy April Fool's Day. You kind of just do vicious pranks on people. But don't worry, we're not going to prank you. Instead, we're going to give you all sorts of fun and exciting options info. To help me do just that, of course, we got a great cavalcade of characters. Let's start off. Let's see. Let's spin the old wheel. Actually, I think he's back. I think he's back from his very enviable assignment way down south in the warm lands. He is Uncle Mike Tussaw from formerly of Mexico, now of St. Charles Wealth Advisors once again. Uncle Mike, how are things? How goes your tan, sir? How's your pina colada drinking ability? Has it leveled up?
No, my tan, no one believes me that I actually went to Mexico just because of the fact that I believe in sunscreen. Because if I even think about going outside, I get sunburned. So I put the stuff on by the gallon. So I am still as white and pale as ever, and very proud of and very happy about that.
Uncle Mike Tussaw, pasty as ever. He has it on his business card right there. So he goes to Mexico. You have no idea hopefully you didn't get any of the other untoward things that used to go along, at least back in the day, with the trip to Mexico. Now, not so much. So hopefully you dodged all that fun stuff. Speaking of fun stuff, he was another one who was on assignment in a pleasant area of the country out west, not Southern California, actually. It was in the southern portion of it. We are joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, how were things out in the sunny west, sir?
It was nice. Went to Carlsbad, hung out on the beach, and then I went to Disney and hung out there for 2 days.
Oh, you did the old Disneyland? That's a fun one.
I gotta say, people are suckers for going to Disney World. What they forget is people in California go to Disneyland in the summer, and then on spring break they go somewhere else. So Disneyland was, the longest wait we had was an hour. Almost everything was between 15 and 25 minutes for
it wasn't
you
bad.
name it. Yeah,
Oh, that's great.
It was
that's
not
awesome.
bad at all.
They might have they're pretty aggressive with the past blackouts there for the locals, so they might have blacked it out for local residents in that time too. I don't know.
Yeah, I don't know, but I know that it was really not bad at all for traveling around. Most people I think were relatively local, it was fun. My little one was terrified of Mickey and Minnie and you name it. And there they've got like this Star Wars museum. So I had a drink at the cantina, and Mark got to meet Darth Vader and Chewbacca and Rey.
There you go. Priceless memories that will last a lifetime, sir.
Rey tried a little bit too hard, I will say, but everyone else was pretty darn great.
Well, she's the new cat on the block, right? How are you gonna make yourself stand out next to Darth Vader? You can't.
Yeah, no, it was funny
can.
though. They had what's his face from the new ones, the Darth whatever. Who's the
you mean
kid.
Kylo Ren?
Yeah, they had Kylo Ren. Mark was like, "Meh." And that was the only character we didn't meet.
He's like, no interest.
Which tells you what was wrong with the last Jedi.
Yeah, it's the same thing in Disney World. Whenever you go, there's two lines: one to meet Chewie, one to meet Kylo Ren. Chewie's like 45 minutes, Kylo's like 5 minutes. There's never a long wait to meet Kylo Ren.
The Chewbacca guy was awesome, by the way. I got a great picture of me hugging him. I got to send you.
Well, you got to hug Chewie when you meet him. It's kind of required by law. That's the deal.
It is, and it was one of the better hugs I've ever had. I gotta say.
They say the Wookiees know how to hug. If they're not ripping your arms off because you beat them at Hollow Chest, they are indeed ripping. They are indeed great huggers and also great roarers, as we all know. And last but certainly not least, as we're taking this journey through all sorts of fun places, we are joined once again by Colin Songer from the Fidelity Strategy Desk, holding down appropriately enough the Fidelity hot seat. Colin, welcome back. Did you go anywhere fun since the last time we talked to you?
No, still just up northeast and had 60-degree weather, but New England's got a sixth sense of humor and decided to mix in a little rain, so couldn't enjoy it as well.
Well, glad to see.
Just kind of stayed around here.
You and I someone's got to work around here. You and I nose to the grindstone while these two guys are off hugging Wookiees and drinking pina coladas in the southern territories. All sorts of fun stuff. All right, let's keep on rolling. Right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the block where we talk about some trading. And we're seeing a lot of green on the old screens today. Apparently, all that hand-wringing, all that consternation over China's economic woes, economic malaise, maybe, apparently, probably, who knows, given by today's action, looks like it, maybe was a little bit overdone. The market's liking some manufacturing and some data coming out of China today. Maybe shows it's not exactly the end times that people had been fearing over there. And so responding with a lot of green on the old screen today. Most of the major indices up right around the neighborhood of 1%. S&P, actually the laggard, up a mere 0.9% up there. And of course, all that green on the screen usually means a little bit of red on the old VIX cash screen. VIX cash actually kind of vacillating a little bit today, but still kind of right around the 13 3/4 level, which is effectively kind of unched. It got as high today as about 14 even, hit 14 even ever so briefly earlier in the session, and it got down about 13.60. So it's kind of been in a pretty tight box through most of the day, even though the market's been feeling a lot of love, a lot of joy out there today. Speaking of love and joy, let's go back the opposite way around the old panel. Colin, we'll start with you. I know a lot of things have probably been taking up the action of the Fidelity traders over there. What is lighting it up on the Fidelity board today, sir?
Yeah, interesting enough with the S&P hitting going right next to a price level since March 21st. So interesting action that we're going to see coming here, which a lot of the action that we've been seeing when we look at our Fidelity customers' orders is, no surprise, Lyft lifted its IPO on Friday, and that trading has continued through Monday, where the activity, even though it has been concentrated in this, has actually fallen below its IPO price of $72 per share. So a little surprise there. Right now it's 69. Spot 5.5 down $8.75 today. I'll be very honest with everyone is that I've been watching this yesterday and watching it today. It's been an interesting story to say the least. We've had our usual candidates up there. Boeing as well, still really cracking that top 5. But we've also had symbol PULM, which is Pull Matrix. And news came out, Pull Matrix, unit signs agreement with them for an investment for the pulmazole for an upfront consideration of $22 million investment. So it's a biopharmaceutical company where what I thought was interesting is when you pull up some information about this particular company, now it closed yesterday at $1.27, and it's up $1.56 just today. So the 10-day average volume sitting at 388,000, the 90-day average volume sitting at 522,000, and it's 1 o'clock Eastern time, and it's already had 41 million shares traded so far today.
Jeez.
So interesting actually, and getting a lot of so far movement compared to its average volume. So those are really what Fidelity customers have been trading so far today.
Fidelity customers getting into the new listings and the some of the more esoteric ones today. Everyone thinks there's going to sling SPY and Apple, and they do that, but also getting a little bit more out in the weeds. I like to see that interesting stuff, and not surprising. Everyone is chomping at the bit whenever these new IPOs go out. Got to get some of that. Got to get some of that. They charge in. I'm sure they were doing it, like you mentioned over there at Fidelity as well. And then lo and behold, it takes a bit of a break once the iBankers stop defending those levels and all the madness has subsided a little bit out there. Off today, like I said, about 8 handles or 10%, right around the 70 level after all that ballyhoo about popping up at 72 and rallying higher than that. So got up to 88.60 at one point. So from those highs, it's off about 18 handles. So yeah, what a turnaround we have seen out there. Speaking of turnarounds, VIX cash, not quite where you thought it was. Actually, not that far away from your prognostication on Friday, Mark. So there you go. All you had to do was wait a couple more days.
It was Andrew.
I know, but I'm saying for you guessed for last week. You were off. And actually, no, you were like 12 something. So no, you were still off. But you're closer than you
Friday.
were.
We'll get there by Friday.
So what's catching your eye? And then we'll save some of your maybe interesting nuggets from RMC for the vol views on Friday.
What I noticed was there is a pretty interesting amount of Vega exposure being built in VXX. And if you look at the open interest of VIX and VXX, they are really climbing and climbing pretty substantially. I thought that was really interesting. Open interest on VXX and VXXB is way up, and VIX. And so I thought that was kind of one piece that was a little eye-opening to me.
Let me guess, a lot of it is centered around the 30 strike, right? That's what everybody likes to play.
Yeah, I mean, there's just a lot of open interest, and it's mostly long. So, obviously this was on Zero Hedge. I read an argument that, hey, maybe we're going to see a collapse in VIX, kind of just the opposite from all this long Vega exposure. Now, I think that's a take from someone that's a hot take from someone that maybe doesn't get how VIX hedging works.
Are you telling me there's a hot take on volatility in Zero Hedge? I find it hard to believe, sir.
Yeah, I know. Anyway, it was a real hot take. And I think that you're going to see they had a point that if some of this starts to come off, you could see VIX and notably VIX futures collapse pretty quickly. Also seeing some interesting paper kind of just across the board. A lot of the high-flying names have been kind of sold off. We mentioned Lyft, but look at like Chipotle's down today, Ulta, which blew the doors off. One name that's been really hot, take a look at a chart of Costco. That thing is like an unstoppable force. It has just gone straight up since they reported earnings. a couple of weeks ago. So that's one that is on my radar for, could it really just blow the doors off? Apple looked like it was going to do that, but it's kind of settled right around this 200-day moving average. I'm interested in whether they'll be able to figure out a way to blow through it.
Just goes to show me the old adage that the demand for 10-gallon jugs of mayonnaise will never go away. And Costco leading that charge there to the upside, up to 243.5, up $1.25 today, but back around earnings in early March, not too long ago, 3 weeks ago or so, they were 216, 217. So quite a rally ho it's been out there in Costco land as well. And Mr. Uncle Mike, while you were busy not catching the rays and not enjoying the tasty beverages down south, what was lighting up your radar? What's light up your tape today, sir, out there in the land of St. Charles?
Well, a couple things. In the news right now, there's a lot of talk about the inverted yield curve and how the yields are very close within the treasuries at this point. And so I think I'm of the school of thought to where even if we get an inverted yield curve, meaning the near-term bonds yield higher than longer-term bonds, I'm of the school of thought that this time it may be different. The common thought, of course, is that an inverted yield curve is a signal of an upcoming recession. But whenever we've had the inverted yield curves in the past, it's been coming off of longer periods of economic prosperity. And this recovery that we've had in our economy since 2009 has been very slow. So I'm not very concerned of the yield curve, and that we're hearing a lot of talk about in the financial news media. But for now, I still am not viewing this as a concern. In terms of what's lighting up my tape today, it's a pretty broad-based rally that we're having right now, and that financials are really getting after it. We have energy is up, technology is up. Apple, of course, is very flat today, which is surprising compared to the rest of the market. But overall, I think this is a broad-based rally. The things that I would add to what we've talked about thus far on what we've been talking about today is that with the yield curve where it is, I think that's going to be the next thing that we're talking about, of course, with the China deal and everything else. But that's what's going on. And I like Costco, too.
You can't turn your nose up at just 10 gallons of mayonnaise. It's just who can? Who can resist such a deal, such a savings? It's a lifetime supply of mayonnaise and everything else in that store. You can't buy just one. You got to buy 47 of whatever it might be in one enormous package. So hopefully you have a pickup truck. All right, let's see what else is lighting up the tape here today. And markets are up firm, but it's not a huge volume day out there coming into showtime. We saw VIX just shy of 200,000 contracts out there. The ADV is a little bit north of 500,000, about 561. SPY, a little bit right around 1.5 million contracts. The ADV about 2.7 million out there. SPX closing in on 700,000 contracts. The ADV about 1.2 million. The Qs, 354,000 contracts, pretty much right around close to half of what they do out there, which is about 750 or so out there. And the Russell, right around half as well, about $1.60 on the tape, and about 312 is the ADV out there. Excuse me. Moving on to the top most active equity options out there. Let's see here. Now we got a tie for number 10 and number 9. Netflix and Ford, respectively, 10 and 9, both with 96,000 contracts. Number 8, good old Tesla, always finds a way to sneak into the top 10, 108,000. Number 7, Facebook, 113,000. They're coming out today welcoming new regulation to their space. So who thought you'd see that? Interesting stuff afoot there as the scandals and pushback against Facebook continue to grow. Apparently they're saying, hey, bring it, government. Which can go one of two ways. We shall see. Number 6, good old JD, our old friend JD, 132,000, right a tick below Microsoft there at number 5, 133,000. Number 4, COTY. So COTY and JD, once again, lurking in around the middle there. 134,000 for COTY. Number 3, AMD. $1.44 on the tape. Number 2, Bank of America, 244,000. And number 1, even though it's not really doing much today from an underlying perspective, the options are still lighting it up. 294,000 contracts out there for Apple. Let's look really quickly where the biases are in the paper flow. Bank of America, 79% to the calls. JD, which those Chinese names tend to lean that way whenever they light up the top 10 here. 78% to the calls there as well. 77% for Ford. Let's do a quick check-in on Ford, see what's up out there. Ford up about 20 cents. It was shy of the 9 handle. Got down to, it was $8.96 right now, so it still is shy of the 9 handle. But recently the low is actually got down to, it's like about $8.40 or so back, $8.31 back in early February or so. So it's kind of had some rough going. But today, apparently, folks liking what they're seeing out here. I don't see a lot of underlying news that would drive all that upside action here, or at least call action. We haven't had a chance to parse it. Maybe it's overriding. We shall see. Let's see here really quickly. Oh, speaking of options coming online, you guys are hitting us up. You know, you all want it. You all want to know when they're trading. When can I trade my options on Lyft? When can I sink my teeth into Lyft? I'm sure Trey and Colin, everybody else over there on the Fidelity Strategy desk are probably getting hit up about that quite a bit these days. Good news for you guys is that this stuff happens a lot faster. It used to be weeks, maybe a month, maybe 2 months or more, maybe several months before these things would get listed. These days, the options exchanges are hungry for volume. They know you want it. If you have a name you want, particularly in those early weeks when the glow from the IPO is still fresh, they want to give it to you. So Cboe announcing today they're giving you options on Lyft this Thursday. So pretty much right around a week after the listing, which is about as fast as this is going to get. Remember, there are some things, the underlying, some levels that it has to meet before it can be certified as optionable. And once it has met all those criteria, which they hopefully will say was by Thursday, you can go out there and you can trade your juicy puts on Lyfts, which will be pretty juicy right now given the sell-off and everything else we see usually around an IPO. So all of you asking, Lyft options coming on Thursday. Meanwhile, we have to keep on going right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get odd, let's get weird, let's get wild. Let's break it down with some weird activity. Going to actually do it again today because we like paying off some of the names we've looked at in the past. And we're going to go back right now to February 11th to what at the time we could only really term just an options palooza that was going on out there in XOP. This is the Spider Oil and Gas ETP out there. Trading today, 31.20. Up about half a buck out there. But what we saw back on the 11th of February was just pretty much all the options trading. That's pretty much the succinct way to put it. What first caught our eye was 65,000 of the 32 calls for March going up for 11 cents. Then we saw that was a sweep right on the offer there. Then we saw right around about a minute or so later, not listed as a spread, but kind of hard not to intuit that it's somewhat related paper. We saw the March 34 calls going up for 2 cents right on the bid. So it looks like someone probably legging into a nice two-handle vertical many, many times. 65,000 by 55,000 times. Then we saw some puts lighting it up to the tune of the March 27 puts. 50,000 of those going up for 46 cents right on the bid as well. So it looked like at first like maybe they were financing a vertical with a little bit of puts. So the old nice risk reversal, bullish risk reversal. We like that one. In which case, looks like they were collecting a nice juicy credit to do just that. And then we also saw later on 50,000 more of the 34s going up also for 2 cents. So a total of 100,000 of those, more than 105,000 of those on the day. And also 50,000 of the June 27 puts. And that actually was a spread with the March. So they look like they were rolling March perhaps out to June. But then again, the June went up on the bid as well. So it was all sorts of weird, funky paper for size going up in XOP. So we kind of parsed it as best we could, but it was a lot of paper going up in a lot of weird directions. Fast forward to today, let's see how a lot of this went out. And the interesting thing about this trade is all this paper went up, and yet the underlying XOP for pretty much the entirety of that time did a whole lot of nothing. It sat there. So right now I said it's 31.20. when this trade went up on the 11th of February, the stock was 28.22. So it had rallied since then. But of course, over the time frame we're looking at, which is through into March expiration, it went out 29 3/4 pretty much. So it didn't do a ton. And most of these positions were still open going into expiration because obviously your 32 calls, you're looking at those somewhere getting in the neighborhood of $32. Didn't quite get there, so you'd expect those to be open. And they indeed were. Worth noting, though, that this is a name that just does some paper. In fact, looking at some of the flow history on these 32s to see, hey, what was trading out there, what was going on. These things were active pretty much every day since and before the 11th of February. On the 12th, they traded 17,000 more. On the 14th, they traded 20,000 more. On the 15th, they traded 23,000 more. And the OI is going all over the place. OI got up to 106,000 at one point. 26th, and then we finally started to see the OI start coming down later in February. We saw 47,000 more trading on the 27th of February. So these things trade a lot, these March 32s. Life-to-date flow, courtesy of our friends over there, the Flow Master and his crew, his cohorts over there at What's Trading. The life-to-date flow just on this strike, 318,000 contracts. So this was a very active option. So coming into expiration, not surprising that there were quite a few open, about 60,000 still open, which lines up pretty well with our initial trade. But then again, hundreds of thousands of contracts traded since then. So it's kind of hard to tell which one was our initial guy and which one was what was going on. The point of the matter is XOP trades for freaking size, and it has been, at least of late. Mr. Meatball, this is not a name we talk about a lot here. There's a wealth of options, pun intended, when you're looking at the various spider select different sector ETFs. Is this one that catches your eye? And if you have any thoughts on this, a lot of options palooza signifying nothing. If you did sell those puts, the puts worked out well at least, so they kept some premium there. But Mr. Meatball, what are your thoughts on this just palooza of XOP?
This has actually been one where the volume has been heating up because people have been trying to kind of maybe predict a bottom for oil. And XOP is gas and exploration. If you think an oil bottom is in, this is probably a better play than XLE. And that's part of the reason why you're seeing all this volume and all this trading likely happen.
Yeah, I was going to grab Uncle Mike to see, because I know he likes his XLE. He doesn't really like, I don't know if he likes XOP. Maybe we'll get him back. He's back to the on assignment very quickly. I think he's taking a client call. He's a very busy man, Uncle Mike. But we'll keep on rolling. Yeah, this was a weird one. A lot of paper. A lot of it still open, as you might expect, going into expiration. But then again, there's a lot that trades on these strikes. XOP. We talk about XLE a lot. We talk USO every now and then. We don't really talk XOP, but clearly folks are trading it and trading it for size out there. So if you are intrigued by this one, maybe worth noting. The calls didn't work out so well, but if they financed it by puts, like it seems like they did, that side of the trade worked out pretty well, and they probably kept a decent amount of that credit somewhere in the 30-odd cent range. So they're probably looking all right on that trade net, even though it's a lot. It's a lot to parse in that one. Let's keep on rolling. Maybe our next one will be a little bit easier. This is CRC. This is California Resources Corp. So keeping it in the resources/energy realm. This time, let's see, trading 27.10 today, up $1.40 or 5.5%. So a good day for CRC. When we looked at it, it was back on November 26th, and we were looking to the dark side. We're looking at some size opening put love to the tune of the Jan 15 puts. They were going up opening on the offer for 60 cents, 8,400 times. Let's see, on the day that this trade went up, the stock closed at 24.5. So this was a fairly out of the money, fairly bearish trade. They had less than 2 months for this thing to really take it on the chin, drop 10 handles on a $25 name. That's a big move. And yet, lo and behold, if you remember your recent market history, when was that nadir for most names in the market? Right around Christmas Eve, about a month after this trade. And that's pretty much what happened precisely with CRC. This thing dropped like a stone all the way down to $13.92 on Christmas Eve. So in the near term, it worked out pretty well. These puts worked out pretty well. But again, and this is the caveat we've said before, if you have a hedge, you kind of want to do something with it, and usually the window to do something with that is pretty short, and that's exactly what this guy had, because his trade worked out like gangbusters, but he only had a few days to really make that before this thing turned around. The market turned around, after Christmas Eve, but this thing turned around even faster by Jan expiration, which is, of course, when these guys were going out. So about a month later, a little less actually, this thing was already back up to about $22 again. So it sold off from about 25 down to shy of 14 and then back up to 22 in the span of about a month and change. So very active time out here. So our friend here had a very short window to close these bad boys out. And I haven't had a chance to parse the OI to see if he did. But hopefully, I'm going to go out on a limb and say hopefully he did, because otherwise it'd just be a shame. Mr. Meatball, this kind of reemphasizes what we talked about before, and we've seen this play out many times in the odd block before, where you got these puts, you spent the money, you took the effort to do it. Now you got to do something with them, and hopefully our friend here, and maybe I'll have a chance while you're talking, I'll have a chance to dig into the OI to see if he did, but hopefully our friend here did exactly that. Do you concur, Mr. Meatball?
I concur wholeheartedly. I'm like the Vanna White to your Pat Sajak on this idea. That's how much I am clapping for your selection.
Clapping, smiling quietly with some nice freshly whitened teeth. Let's look here really quickly on that. I'm looking at Jan expiration for the top open interest positions here in CRC. What do we want? We wanted Jan 15 puts. Though there were still 6,500 of these open on expiration. So he traded 8,400, 6,500 left. And by the way, that print was opening, obviously, on the 26th of Jan. I'm guessing that strike doesn't really do a ton. But still, that's a bit of a shame if that is indeed the case, because that trade worked out, and then it didn't. And 6,600. So someone out there, whether it's our friend and he closed them out, or whether it was, and then someone else piled in. I'm going to guess he probably took off with some of them, so he probably wasn't too sad about it. Maybe he covered his costs and let the rest run, and then the rest didn't work out. But either way, someone was left holding the bag on about 6,500 of these Jan 15 puts on expiration, which is a sad state of affairs, unfortunately. Let's move on from this sadness, though. Let's see if we can put a smile back on all of our faces with our final name here in the odd block today. This is Analog Devices, Inc., ticker symbol ADI, trading today 108 and a quarter, up about $3 and nearly 3%. But we're not talking about today. We're also going back to November 26th, our show back then, when we profiled, looks like some opening upside call, not love this time, but a little bit of harvesting the old risk premium to the upside. It was the Jan 97 halves going up nearly 10,000 times for 76 cents, pretty much right on the bid. They were 75 cents at 95, so clearly crushing a bit of the old bid. Opening over there on the Philly. So it looks like someone trying to harvest the old risk premium, probably an underlying holder. And a couple different scenarios, obviously, you can have when you overwrite a ton of calls on your stock. Obviously, you could gap right up and gap through it. That's not a good scenario, obviously. You could gap right up and then maybe sit at your strike. That'd be a little terrifying at first, but it would work out pretty well in the end. But maybe you wouldn't want that to, that might be a little bit too much for some people's delicate nervous systems. You could obviously plummet. That would not be good either. Or you could have the alternative, the kind of the nice one, where you kind of slowly drift upwards toward your strike. So you're getting your payoff with the stock. Your calls are coming in nicely, but not too crazily. It's not much of an aggressive pop, so they don't pop from a vol perspective. It's kind of nicely coming off, and that's exactly what happened to this guy. So this guy was smiling all the way to the bank. The stock, when he put the trade on, let's see, this was on November 26th, so let's go back here. Let's see, November 26th, the stock closed at 90 even. He was riding the 97 halves, excuse me. And over the period into January, we actually saw a bit of a sell-off at first, so he probably was a little scared going into to this trade because on Christmas Eve, of course, the market took a bit of a jump, and this one did down into the low 80 handles at that point. So he was off a little bit at that point. But then we saw the nice slow rally for the second part of this. So by the time you get back to Jan expiration, it's pretty much right close back to where it was. And we have these calls that you wrote. So you're pretty much close to unched on the underlying, and yet you have this nice little extra bit you took in terms of the calls. Which was, if he pocketed it, which looks like he did, about $750,000 in terms of net premium harvested by this fellow. And its stock closed on expiration at right around 91.36. So pretty much a little bit north of where it was. And then a little bit later, shortly after expiration, this guy was right in that it rallied up to that 97.5 level about, on the end of January, about the 28th. So it got there, just not after his calls got called away. So he sold the calls, he kept all the money, and then the stock rallied beyond that after his calls went away. So it kind of worked out pretty well. He got kind of the best of both worlds. A little bit of a scare at the beginning there, but after that, he was a happy camper all the way to the bank. Mr. Meatball, this is kind of a fun one to end on because it looks like it worked out pretty well for this guy.
Yeah, sun shines every now and again, huh? It was it's funny how timing matters so much. Between one day and picking one day and going on another day, and when you expire, it's amazing, isn't it?
Yeah, we see it all the time in this segment. The guy does all of the work. He's completely right, but he's off by like a week or a month. And yet he picks something and it goes out worthless, and then a week later, a day later, it takes off in the direction he wanted. So it's the challenge all options traders must face. It is the Faustian bargain we make to trade these products here. But speaking of which, let's see what kind of crazy bargains you guys might want to make. It's Monday, of course, so it's a little bit of the old strategery.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, let's break down some strategy. Luckily, we got some folks helping us out from the strategy desk, the appropriately named strategy desk over there at Fidelity. And Colin, we like to pick you guys' brains sometimes about what your clients actually want to know. What are they calling you guys up and asking you about? And it sounds like people have the old primary Greek, shall we say, on the brain today, a.k.a. Delta. So why don't you walk us through a little bit of Delta, what they're asking you about, and what you guys tell them over there on the strategy desk.
Yeah, so Delta's, as you stated, probably the most common option Greek that retail traders are familiar with. And just a quick summary is that option Greeks are just a mathematical calculation used to determine the effect of various factors on options by pulling it right out of those option pricing models. There are several ways that Delta is utilized, and I really break it down to three ways. Now, it's not all-encompassing, but these are the most common that people are familiar with. And it's, the options theoretical price being adjusted based on a 1-point move of the underlying. So as an example, if it had a delta of spot 5 and the underlying moved 1 point, the expectation is that the option price will theoretically move 50 cents. That's probably the most common that people are familiar with when they're first learning about the option Greeks, is that interpretation of delta. But now you get to the next piece of the puzzle, the next way that option traders use delta, which is, and this is more common for option sellers, is that a lot of times they'll use delta as a way to find that approximation or estimate of probability of being in the money by expiration. I think that's a key phrase that we want to be very clear about, is by expiration we're talking about. So, and just remember, those are key phrases, right? It provides a quick estimate. It's not going to be exact probability. And then lastly, is the directional exposure, right? So some traders will use this as a measurement of share equivalency for the direction of their position, as an example. And these are customers that we speak with on the phone here at the Trading Strategy Desk. If you have a bullish strategy, it's going to give you what's known as positive delta. So when I talk about bullish strategies, we're talking about buying calls, selling puts, right? And then when we discuss about negative delta, we're talking about bearish strategies, selling calls, buying puts, things of those nature are what accumulate those different types of deltas. So now when we talk about this, you'll hear a reference. A lot of times traders will speak, I have X amount of deltas, I have 50 deltas. Now that's usually in terms of a share equivalency. Other manners will be used in decimal form, right? This is usually when you're seeing it on an option chain to get a single contract amount, and that's usually utilized by someone who's using that options theoretical price adjustment based on that underlying movement. So delta is going to range from 0 to 100 for bullish deltas, and then 0 to negative 100 for bearish deltas. The concept is, when we talk about option Greeks, it's a measurement of impact on the extrinsic value, right, or that time value as it's known, instead of that intrinsic value, which is just the value between the strike and how much it's in the money with the underlying. Now, when we talk about these particular aspects of it, you got to remember, option Greeks don't work in a vacuum. As much as we want them to, they don't work in a vacuum. That underlying price is changing, time is changing, and of course, implied volatility is changing. And that also is going to adjust the delta along the way as well. As an example, if you have a 50 delta, you're actually dealing with the strike that is typically at the money. Now, if you have a delta that's less than a 50 delta, then it's typically out of the money. And then if it's higher than a 50 delta, it's typically in the money. So this is a quick way to assess where you stand in terms of your strike in relation to that underlying. So these are typical ways that retail traders use delta to help assess their position, set up their position, and also manage their position. And on Fidelity.com, if you go up in the search box and you type in power of delta, we have an article that references these 3 different methods that option traders use delta.
Colin, I'm curious because I've made this comment a lot. Sounds like you probably agree with it, but I'm curious your thoughts because you're getting calls on the retail all day long. I've often said if you want to take broad labels for retail, the retail tend to fixate a lot of them on delta and the directional use case of options, particularly in the early days when they're first starting out trading options. They want to buy a call, buy a put, that sort of thing. And then the pros, quote unquote, fixate more on Vega. Do you think do you agree with those kind of broad lines of demarcation, or do you think it's something else?
I think that's pretty accurate. I think a lot of times the retail traders do focus on delta because they are so concerned and view everything within a directional position. And from what I've noticed is that a lot of times professional traders do focus on that volatility. But I would say, look, I don't work on the institutional side, so my exposure to that is going to be a little bit limited. But from my brief exposure, I would say that that's pretty accurate because that's usually in terms of what they work in is changes in implied volatility, and they try to limit their directional exposure as it works.
Yeah, and one thing to think about is that most retail traders are coming from more of an investor approach, whereas the institutional side, it's all about, moving dollars and really, trading and managing risk of a giant book. It completely changes the way that you kind of approach what you're doing when you take it from kind of that respect. I think it's very important for retail traders to remember that, institutions have a totally different view on option use case than they do. And that is what drives a lot of how those guys think and trade, and maybe why you don't always understand some of these, fun 3 and 5 ways that we do in the odd block.
That is indeed the case. And Uncle Mike, I'm trying to think the last time you did it's been a while since I think you actually sat down and talked about delta on the old strategy block. So any thoughts you have about the old mother Greek, if you will?
The old mother Greek. I like that. Yeah, I think that with Delta, it's definitely something that I would agree from the standpoint that that is the big focus of what a lot of retail traders are looking at. I know since I'm an option trader based upon a bullish stance, a long-term bullish stance, which I've said on the show at least 6,000 times, I do spend a lot of time looking at Delta. But to add to the point that option Greeks do not work in a vacuum, that's very important. You have to have an understanding of how the other Greeks are going to actually affect the Delta itself. Today, if you're long Deltas like I am, well, I always am pretty much, then the Gamma is really helping a lot today with making the Delta even more powerful. So I think that's something that's very important as well. The other thing to mention is that as you're looking at Delta, and one of the three ways is that stock can also be Delta. So let's say that you are looking to get some type of a position to neutralize your Deltas or whatever the case may be, and you need more Deltas, but you're concerned with Gamma. Remember, stock's also an alternative for futures, depending on what side you're trading. You can actually use portions of the underlying to gain or lose Deltas if you want to be shorter. And by doing that, you have more or less Deltas, but you would not have any Theta because stock does not have Theta, stock does not have Gamma, stock does not have Vega, but you can also add underlying to use your positions to give you what you're looking to get when doing so. Obviously, it's not going to be in the same factor, meaning you're not going to get the same type of capital efficiency, but that is something to think about when looking at your Deltas.
Yeah, Delta is a lot. We can spend a whole show on Delta. It's a very basic Greek, but there's a lot involved with it. Another thing to mention that, Colin kind of touched on this, but just worth hitting on again. And we all do this. I think we're all guilty of doing this. I still to this day, if I show up and I'll mention something, I'll know another guy I'm going to meet somewhere who used to be or used to be a trader, and I'll say, oh, you're going to do that? You're going to show up? You're going to do this? And they'll say, oh yeah, I'm like a 70 Deltas. It's just something. It's a shorthand that everyone has developed, which is using Delta as effectively the probability of something going to happen. And it's just worth pointing out that it is not the exact probability. So you have a 50 Delta, it's close to a coin flip on at the money, but it's not quite precise. There's a lot of different things that go into the actual calculation, what the probability of an option expiring in the money is. But Delta, in absence of other tools, Delta is a great approximation. Just remember, if you see a 73 Delta, it is not an exact 73% chance that option is going to expire in the money. It's close. It's probably somewhere in there. There's a lot of factors that can play with that. But just I want to leave that out there. It's not an exact. So all of you out there who use it interchangeably as a probability, and again, we're all guilty of that sometimes. Just remember that when you're doing that, as we keep on rolling into our next segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Before we do that, I want to do a real quick update on where we stand because we're coming hot and heavy, into the final day. Today, April 1st, is the final day of round 2 for Options Broker Madness. We have our Elite 8 slugging it out as we speak. Clashes the Titans everywhere. It's all sorts of fun. It's been a maelstrom. We had a record turnout for round 1. Round 2 is looking the same. So we thank you to everybody out there who's playing along and making this fun for everybody. We have fun. You guys have fun. The brokers win prestige and maybe a shiny trophy. You guys can win fabulous prizes. It's all sorts of fun. And right now, let's do a live update here of all of our various results. In battle number 1, we have TD taking on Schwab. So two old school names in the option space in terms of the old school Thinkorswim and Options Express platforms facing off against each other. TD pulling out to an early lead there. Schwab has fought it back, but it's still a pretty hefty lead for TD right now. 63% to about 36% for TD. Again, has a day left. If you don't agree with those results, or if you agree, you got about a day left to get in there and make your votes heard, make your voices counted. Colin, here's an interesting one here. I thought I was going to have some bad news for you guys, because I remember I mentioned this is the first time ever in the 3 years we've been doing this that Fidelity has actually made it to round 2. But it looked kind of dire. I got to say, it looked kind of dire in the early voting for round 2 there, Colin, because you guys are facing off against TradeStation, and TradeStation pulled out to an early lead. They have obviously their adherents in the space, and they were pretty motivated. But it seems like in the subsequent voting, as we've seen the days start to span out, you guys are actually fighting back. In fact, right now, as I'm looking at the numbers, it's about 55% for Fidelity to 44% for TradeStation. So you guys have actually pulled into the lead. So, well, see, I guess I told this to Trey too. Like all the appearances, I think they're starting to resonate, Colin.
I think so. I love it. That's what I love to hear.
So there's a very definite chance, a higher than 50 delta, shall we say, that you guys might make it into round 3, which is unprecedented territory here. So that's a fascinating race to watch. If you haven't voted in that one yet, listeners, get on out there and vote. Number 3, we got Ally Invest taking on IB Interactive Brokers. IB pulling out to an early lead there and kind of maintaining it, even though Ally is kind of starting to fight back now. We're seeing 63% to 36%, so kind of the opposite of our first one there for Ally. And rounding out the battles, number 4, we've got E-Trade, so the former Options House and Option Monster, as well as, of course, the legacy E-Trade platforms, all kind of aggregated into one. All those taking on Tastyworks. Tasty folks out there, they got a strong social media following, and they're doing their business out there, 65% to about 34% for Tasty. Again, there's still time left, so if you don't agree with any of those results, or maybe you do agree with them, you want to put an asterisk on them, and you also want to schedule and register yourself to win fabulous prizes. This round, I believe it is an Amazon Smart Speaker, so get in there. Vote, like, retweet, share, all those things. It's like Chicago. Vote early, vote often. We're based in Chicago, so we embrace that philosophy. So vote in the poll, but also like it, tweet it, reshare it, all the things you can do on social media. Every time you do that stuff, it's another vote for you. It's another tick. It's another chit in the old hat, if you will. So that more chances you have to win fabulous prizes. Every round there's new prizes, new fun, all sorts of good stuff. So get in there. A lot of you have. We love to see you in there. Get in there. Fight it out. It's your chance to make your votes heard to the brokers. Take advantage of it. And you can win prizes to do it. What could be better than that? All right. Let's go back around the horn with everybody. Let's go back the other way. Let's start with Uncle Mike, sir. What is on your radar for the rest of this week until we meet again on Thursday?
Until we meet again, well, we're ahead. We're above key price levels that we were a couple of weeks ago. So I'll be interested to see how we close today, at least in the S&P 500. So watching that, continuing to keep an eye on the yield curve information to see if that has any effect on the markets, which, like I said earlier, I don't really feel it will, but still got to keep an eye on that. And, of course, watching for a trade deal of some sort to see where we are going. So a lot of exciting things to watch, as always, and April is going to be a really good month on this show with everything that's going on in this market.
I agree.
You agree. So, Mr. Meatball, what are you watching and what are the crazies in the pit chat watching this week, sir?
Oh, what aren't we watching this week? There's, we have non-farm payrolls, which, of course, I think everybody and their mother watches.
Never heard of it.
That matter. Yeah, and we're starting to get, believe it or not, I know it feels like yesterday, but the throes of earnings seasons are approaching. So we're watching that. One name that Andrew, it's interesting. Walgreens announces that they're doing CBD, and Andrew has 3 different trades written about it in less than a day.
Are you saying there's a correlation there, sir?
I'm not saying there's not. Let's just put it that way. So I'm real interested to see whether the pot people go huzzah for
there's a reason he moved out to the hinterlands of society,
yeah,
right?
No kidding.
So he wanted to be on the fringe of law.
Yeah, this way he can actually claim it's an actual skunk.
There you go. See, it all works out. And last but not least, Mr. Collins, sir, what is on your radar for the rest of the week?
Yeah, so I'm going to continue watching the S&P action from here. It's really interesting, especially where how it closes today, as well as to see if it's going to fall through, especially where we're seeing that there is a potential for a golden cross forming. For those who don't know the golden cross, it's the 50-day simple moving average going from below to above the 200-day simple moving average. Be interesting to see if that actually does form. Right now, it's it's right on that same level, but it's all dependent on where it closes. So that's going to be something that's catching my attention, and I'm going to continue to watch Lyft and how this story plays out. It's been very entertaining so far, I'll say, where the price action is, how it peaked at 88.60 and has fallen since. So it's going to be interesting to see how that plays out. We have, later on this week, there is the China Vice Premier is going to be meeting with Washington later this week. So my eyes are going to be peeled for headlines about what comes out from that to see if there is progress on that. Those are really what are catching my eye, and the yield curve as well. I mean, that's something that's been just grasping those headlines along the way. So obviously we're going to see how that's going to impact and how that plays with what we've been seeing out of the market action.
Gotta love these names in the technical space. The Golden Cross, the Death Cross. They've done some good marketing and branding for their names. I'll give them that. Because of you guys, because you and Trey and everybody else talking all these technicals, we're getting all these technical questions now, Colin. So I'm going to put those all on you and your cohorts there on Thursday's show. But of course, that music means we've come to the end of another epic journey through the world of options. It's been all sorts of fun today. We talked a little bit of Lyft. Gave you a little bit of Lyft on Lyft. Options coming. By the time we do our next show, we'll have options out there. So that'll be a fun one. Who knows where the hell Lyft will be? It could be here. It could be higher or lower. We have no idea. That's what makes IPOs so fun. We talked about volume, activity, what's going on in Fidelity land. We talked about most actives. Checked out some weird trades from our past. We know you guys like when we do that, so we like to keep you happy with those. Got into all sorts of fun about the Mother Greek, aka Delta. Listen to that one maybe a few times. Get a little bit of familiarity with that one, particularly if you're new to options. That's a good starting point for everyone. Then we rounded it out with a little bit of an update. Fun fighting going on. Make sure you get your voices heard. Easiest place to find it is at Options on most of your major social media platforms. Head on over there, click on the survey link, get in there, fight it out, register, vote, like, share, and you too can win fabulous prizes. All right, let's go back around the horn and see what everybody has cooking. Let's go back that way because he's been off for a while. He's been resting. He may not remember how to do it. He may be asleep because he's back off vacation and jet lag. So we'll see. Let's get to him before he falls asleep. Uncle Mike, sir, if I'm intrigued by all the things you're talking about, maybe it's Delta. Maybe I want someone to roll my puts for me. Maybe I just want to just click on the Fox. Where should I go? What should I do?
Oh yeah, Mike. Yes, if you are interested in learning more about what we do at St. Charles Wealth Management, go to my website, stcharleswealth.com. And also, if you're in the St. Charles neighborhood in a couple of weeks on the night of April 11th, we're going to be having our next Option Club meeting, or I should say the St. Charles Investment Club meeting, where the focus will be on options, of course. Stop on by, go to meetup.com to learn more about that, and would love to have you. And that is what's going on.
And remember, when you show up, tell him I personally guaranteed you that he will get you Skippy Zeros and lemonade. So if he shows up, he doesn't have it, say, hey, what's the deal? Mark said you'd have Skippy Zeros. So hold his feet to the fire, listeners. Make him get you delicious Skippy Zeros and lemonade. You will not be sorry. You will thank me. Do not worry. And speaking of thanking me, maybe you will. Maybe you'll send me hate mail. We shall see. But if you head on over to optionpit.com, they got all sorts of crazy webinars. Mr. Meatball, they're going to love me or they're going to send me hate mail for sending them your way?
They're going to love you. So, Mark, you'll like this. We've scheduled our summer event, June 4th through the 7th.
Uh-oh, the Option Pit Summer Bash.
Yeah, always a good time. We always do at least one live podcast, maybe two. Maybe I can convince Mike to leave the city of St. Charles for a Option Pit priced steak, and we'll do an Option Block live, or who knows what will come. But I'll be there. Mark will definitely be there. Andrew, we'll have all kinds of funness going on for that event. So get your keister to optionpit.com and click on our events. And the 4-day event is obviously more geared toward pros, but the 2-day event is a great event, and that comes with a nice happy hour and probably our famous live Option Block podcast. Come and check it out.
Oh, are you doing two? You're doing two events now, a 2-day and a 4-day?
Well, it's a 4-day, 4-day kind of VIP pass, and then a kind of 2-day general audience type of thing.
Oh, that's smart. I like that. Because not everyone is ready for a 4-day extravaganza, right?
Yes. So So either way, you'll get to meet me, Mark, and Andrew. So get your butts signed up.
There you go. Check it out. I have been to it. It is a fun time. You get your learning on, especially now that there's 2 different tiers. Do you want to just dip your toes in 2 days? Do you want to go hardcore? You want to go deep? 4 days. It's a fun extravaganza. Maybe you do the 4-day, you get a tasty steak too. So check it out. It's delicious. All right. And last but not least, Colin, I don't know if you're offering steaks or what you're bringing to the table, but I hear good things about when people call up the strategy desk, what kind of answers they get. So if people want to reach out to you, maybe they have questions about what you talked about today. I do see from the listener mail, we're already getting a ton of technical questions, so I know that's going to be coming your way soon. But if people have questions for you and they want to reach out to the strategy desk directly, where should they go? What should they do, sir?
Yeah, absolutely. I can't be, offering steak. That's setting the bar pretty high. So, but you can absolutely reach out to Fidelity. Just ask to speak with the trading strategy desk. They'll get you in touch with us. We're here to help you out with your self-directed questions to help you make sure that you're aware of the risks involved. And the best way to do that is just call 877-907-4429. We're available Monday through Friday, 8 a.m. to 5 p.m. Eastern Time. Just ask to set an appointment with us, and we're here to help you out.
There you go. Check out the Trading Strategy Desk. Remember, you got to be a Fidelity client if you want to take advantage of that. The easiest place to do that, people are always writing into us, how do I learn more? What do they have? The easiest place to find all this stuff, fidelity.com/options. It's not hard. It's pretty easy. You go there, you'll see all the overview of everything you might want to see. You can see the tools right there. You can see the platform. You can see the prices, the commissions, all that good stuff. And then if you're ready to pull the trigger, you click the tires, you light the fires right there. Then you can call up Trey and Colin and everybody else and take advantage of all that good stuff. Fidelity.com/options to learn more. And on behalf of Colin, and we'll throw Trey and the rest of the guys in there too, as well as the Meatball and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in questions, for voting in our polls, all the fun stuff that you guys do. Keep it coming. We love you. And we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.